Are you hungry for the latest news and trends from the internet? Welcome to What's Cooking on the Internet, your one-stop shop for discovering the hottest digital delights. Hit that subscribe button and let's get cooking.
Can tariffs really derail the US economy? Leave a comment below. What do you think? As the US market opened, investors were on edge due to Trump's tariffs threat. The question on everyone's mind: can tariffs really tank the US economy? The answer remains a mystery, just like the tariffs themselves. In the days leading up to April 2nd, when the tariffs were set to kick in, global stock markets were in a panic. The US major indices had already taken a hit in March and were down for the year. The Dow, S&P, and Nasdaq were all experiencing significant losses. But as the day went on, Washington hinted that if countries worked to fix trade imbalances, the tariffs might be less severe. This glimmer of hope helped ease the losses, and by the end of the day, the S&P closed higher, while the Nasdaq was nearly unchanged. So, what do the tariffs mean for the US economy? Some experts warn of stagflation, a combo of high inflation and stagnant growth. Others point to the potential for higher inflation from tariffs, which could erode consumers' purchasing power and hurt businesses. And then there's the slower job market, which could be made worse by the tariffs' impact on trade and commerce. All these factors have created a sense of uncertainty and anxiety in the markets. But as the Fed's barkin noted, it'll take a while to get clarity on tariff impact. In the meantime, investors are left to navigate the complex web of trade policies and economic indicators. One thing's clear though: the tariffs have already had an impact on the US market. The pre-market futures implied a sharply lower opening, and the S&P traded down as much as minus 1.65%. The Nasdaq index traded down as much as minus 2.7%. The Dow fell minus 435 points. But as the day went on, the losses started to be chipped away. The Fed's Williams and Barkin spoke, offering some hints of hope. Williams took a cautiously dovish tone, emphasizing the need to monitor both inflation and growth risks. Barkin, on the other hand, took a cautiously hawkish tone, emphasizing inflation vigilance and a patient, data-dependent approach. In the end, the indices had already turned mixed, with the Dow higher, but the markets seemed to be comforted by the end of the day. The S&P closed higher, and the Nasdaq was near unchanged. The US interest rate market also saw a decline in rates, with the 2-year yield down minus 1.9 basis points, the 5-year yield down minus 2.3 basis points, and the 10-year yield down minus 4.2 basis points. As the markets look to the future, one thing's clear: the tariffs will have a lasting impact on the US economy. But what exactly that impact will be remains to be seen. Will the tariffs derail the economy, or will they simply be a speed bump on the road to recovery? Only time will tell.